But let's take the conversation forward. We've got Kunal also joining in on the show. Kunal, hi, afternoon. 26,200, Kunal, it seems to be that very tough resistance zone for, I think, what, 13 months now? We've almost had a hit and trial with that level. Where do you think this cool off or consolidation is going to head?
Yeah, so I think after 26,100, this was the high the index had made in the last couple of days. We are finding it a little bit more difficult to break past about those levels. So this generally indicates that the markets could take a bit of a pause over here for a few more days. Ideally this is what happens. When you meet a very tough kind of a resistance, which becomes very difficult to break if you don't have support of most of the large cap names, that generally becomes a point where the index starts to go into a consolidation. So I would actually believe that the markets today are sort of indicative that we are likely to go into a zone where we may drift mild negative, maybe a minor correction which could be at play, say another 150, 200 points on the Nifty, try to come back towards a mean reversion around 25,500 mark on the spot levels. But that, I believe, could probably open up a very good opportunity for traders who missed out on the earlier legs, because this typically what happens is when you meet a tough resistance, the market scales down a little bit further from those levels and then tries to prepare itself with a fresh round of sector rotation. So I believe now there could be dual change which could happen to the markets. The movers which were there in the previous leg, the PSU banks, etc., they might take a bit of a pause over here, and you might have some other sectors which could make a comeback. Maybe private sector banking names, the mid-cap end could probably fare well for itself over the near term, and you might probably expect some of the underperforming sectors like maybe defense, pharma, FMCG, etc., which could try and make a comeback.
Okay, that's the take coming in on the overall market setup. But Kunal, once again, and we've been talking about as to how the smaller PSU and private banking names is where the traction is. And today you're seeing a big spot, be it a Canara Bank, which has run up past 2 consecutive days, be it an IDFC First, which you've liked 4% higher there, and Union Bank, which is up almost 6% on the futures today. Any trade here, even after these big moves?
So, as I said, PSU banks, I'll be a little bit more selective over here because it's become an easy trade. And we've seen that markets generally don't reward easy trade for a prolonged period of time. And it gets into a phase where you might see a correction which could probably happen to the space over the near term. So I would probably avoid the PSU banking names as of now. And even the hourly charts suggest that maybe the likes of Canara Bank, PNB, etc., they're coming into a slight overbought territories on the RSIs, individual RSIs. But IDFC First Bank could be a different case altogether. I think the stock has opened up a very good opportunity of covering up a huge round of underperformance. And, I think the underperformance was not just the last 12, 13 months, but for IDFC First Bank, this was almost like a 3-year underperformance when the stock had come closer to 9,900 levels. And from there, the stock had gone through a 40-45% correction, came back to 55 odd mark. So it's trying to reverse the entire major correction over the last 3 to 4 years for itself. That, I believe, could be a very good opportunity for short-term traders. My expectation is that hopefully in this leg of uptrend positionally, the stock may hit levels closer to 88 to 90 over the very near term.
Okay. So Kunal, what stocks would you recommend to trade today?
So yeah, IDFC First Bank apparently is one of the stocks which I would recommend even at current levels. My belief is that after this breakout, you might expect positionally that the stock could head towards levels of 88. So traders who are looking for a fresh buy could trail the stop losses to 78 for IDFC First Bank. The other stock which I would recommend would be BEL. As I was mentioning that there could be a play of sector rotation, and defense, for example, the larger cap names have underperformed in this last 2-3 weeks. So I believe that could make a very strong comeback. We've seen BEL breaking past above our resistance around the 410, 420 range. So would look out for targets in the range of 444 and stop loss to be kept at 414.